It started. Enormous bank fails make silver and gold highest ever. This is coming down the pike and coming down as fast as we ever thought possible. Now, this banking sector is seeing the most. It's seen to be the most likely source of a systemic credit event. Systemic. I mean, this is really 2008 to 2009. Investors yanking money from property funds as values decline. This is from an article posted on Bloomberg. And the article is titled, Short Sellers Up Their Wagers Against Commercial Real Estate. These investors that are watching everything mature with these loans, commercial real estate, they are seeing this unfold. And it feels like they're seeing it unfold more than you and I, more than the general public. And it's really alarming. And every day as this comes to fruition, it is feeling more and more like 2008. And as you remember, that time period, that's when we saw silver, that's when we saw precious metals really jump. And when this pops, when this comes into play, this issue with commercial real estate and these maturing loans, precious metals are absolutely going to boom. That's my experience as a silver stacker. I'm not a financial advisor. I'm just a guy stacking silver. So look at this article. This article says investors have been rattled in recent weeks by lenders including New York Community Bank Corp and Dutch PFA Bank AG, setting aside larger provisions for property loan losses. They're setting aside, like they're getting ready. The ongoing vulnerability in offices saw those property values plunge 15.2% in the year through February in the U.S., according to an MSCI Real Assets report published weekly. That's a massive plunge. The article says investors are finally waking up to the fact that rates are not going back to anywhere close to zero, and the office sector has changed forever. I mean, clearly, it really is shocking that it's taken so long for people to realize that this shift has happened, this change has happened, and people, everyone that invested, not regular people, but these banks that invested back during the pandemic when they could get these low rate loans into commercial real estate, it's not going back to that. So this is according to Daniel McNamara, founder of Pulpo Capital Management, and he's shorting the sector. It says short sellers borrow stock and sell it, betting they can profit by buying it back at a lower price later. They're also using credit derivatives and indexes and equities to bet against landlords, their debt, and their landlords and their lenders. I mean, it's such a clear deal. It's such a clear deal. It's really a no-brainer looking at this. Anyone who's holding any of these regional banks that are holding this debt, remember, the past week or two, all the support has been pulled out from these banks, and now they're clearly left holding the ball. And the article says almost 3/4 of shares in the SPDR and S&P regional banking ET are sold short, an increase of more than 10 percentage points since the start of last week. Whew! It says concerns are mounting that problems in commercial real estate may reverberate, absolutely reverberate. I mean, when this hits, it's going to shake up everyone's credit. It's going to shake up everyone who either just started a small business or was about to start a small business, because nobody's going to be able to take out loans from these regional banks that are coming down. It says more than 40% of fund managers surveyed by Bank of America Corp now view U.S. commercial real estate as the most likely source of a systemic credit event, compared with fewer than 1 in 4 in January. Man, already the distress emerging in lending to apartment complexes means investors are also paying increased attention to the performance of commercial real estate collateralization loan obligations as those debts come due for payment. And they really are. Throughout 2024 and the beginning of 2025, that's when we're going to see all of this mature. And that is when those of us who who are holding these metals, this silver in my hand, it is a great time to still jump in on silver. Silver is hovering at 24, like low $25 an ounce, especially compared to gold with this giant leap in gold. I mean, yesterday we touched $2,200. I mean, it's really so out of reach. So when all this comes down, the next, closing out 2024, coming into 2025, these metals are going to jump. That's what always happens. That's what happened with the financial crisis, and it's certainly going to happen again. This article says already the distress. It says commercial real estate CLOs bundle up floating rate short-term loans that are typically used to acquire and renovate rental complexes. Those borrowers have been struggling after being hit by higher interest rates and falling valuations in some markets. So what that means in real language is that these loans for this commercial real estate issue, they're being bundled up into different products just to try to break apart just exactly what happened with the financial crisis. The same system, bundling everything up with some good products that are positive and that will show a return and you will be able to pay off. They're bundling it all up. And that's exactly what happened. History always repeats itself, and it's repeating itself now. This article says, for now, offices remain the most visible sources of distress in commercial real estate. Yeah, because people are working from home. Nobody's going to the offices anymore. Those buildings are the collateral for more than 20% of commercial property loans set to mature in 2024. Yeah, 20% set to mature. According to MSCI Real Assets, which said that landlords may have a more difficult time qualifying for a loan extension than those other. Yeah, they may, of course. Landlords certainly will have a difficult time qualifying for loan extensions. They're weighted down. This is like a brutal anchor on them. Here's another article that says, this is from Bloomberg also, says, Fed officials still see 3 interest rate cuts this year. Now, everyone is looking at this, the gold price we've seen, and everyone is wondering, will the promised cuts, like there's supposed to be three cuts over the next of 2024 and everyone is looking at gold to see how we're going to get an impact. So this article says central bankers expect inflation slowdown to resume and maintain their low rate outlook. It says while the latest data hadn't given officials the confidence they would need to begin rate cuts, Chairman Jerome Powell said his outlook for inflation to continue declining hadn't changed substantially in recent weeks. The projections released Wednesday were little changed from December and showed most of his colleagues expect 2 or 3 cuts this year. The central bank held steady its benchmark federal funds rate in a range between 5.25% and 5.5%, a 23-year high. And speaking of year highs, yesterday there was an article on Routers saying that mortgages presently in the spring, like we're basically at spring. This is the real estate season. Mortgage rates are almost at 7%. If you're a first-time home buyer, you're going to get a mortgage. You're just about to touch 7% on a 30-year mortgage. Oh my gosh. That's why everyone's dying for these rates to come down. And that's why everyone in our silver stacking community is still steadfast in silver. There are many stackers, that myself included, that have stacked for so long that if we cashed out our silver, it could easily be a down payment on a house. And that's often been the narrative lately is, should that be done? Should we cash out this enormous amount of silver that we've hoarded over the years and go into real estate? Well, if not at rates like this, I mean, that clearly shows this is the worst time to go in to a mortgage, right? I'm talking about a debt-based society. Getting a mortgage at that high of a rate is just unimaginable and really unthinkable. So for those of us who've been part of that narrative and part of that really argument over stacking silver, stacking gold, or going into real estate, clearly at this point with rates this high, stacking metals absolutely is the right way to go.